federal government just made changes to the capital gains tax that's going to be effective June 25th, 2024. That is making waves all across Canada. What's going on, guys? My name is Jarrett White. I'm a mortgage broker here in BC, Canada. And today we're going to dive into the capital gains tax change and see in what way it might affect you. So basically the federal government's trying to frame this in a way to make it seem like they're trying to help first-time homebuyers get into the market by taxing the rich on when they sell their investment properties. Now this tax has actually always been around, and it was 50% before, and they're going to be increasing it to 66% for gains over $250,000. Now what does this mean for places like BC and Ontario, where real estate makes up a large percentage of people's portfolio? Well, let's talk about it. Basically, the capital gains tax is based on the increase from the purchase price to the sale price. So if you bought something at $400,000 and then later on 10 years down the road you sold it for $700,000, that's a $300,000 increase, and you are subject to capital gains tax if it wasn't a principal residence. So if you're not actually living in it, you're gonna have to pay this tax. Now, even if it's under $250,000, you still have to pay this tax, but it is still gonna be that old 50% only. If it's over $250,000 of a gain, it's now gonna be 66%. Now, what does that actually mean? Are you paying 50% of that $300,000 in tax? No, that's not the case. However, it still is quite significant. Here's how they look at it. So capital gains is basically the percentage of the increase gets added on to your taxable income. So if you were to make $100,000 in a year and you had a $250,000 gain and you sold that property, you are now having to include 66% of $250,000, which is $150,000, and you're gonna add that to your income. So therefore, instead of paying tax on $100,000 of income like you normally would, you're paying it on $250,000 that year. That is a lot of tax. Now, basically the government is claiming that this is only gonna affect 0.13% of the richest Canadians. But to be quite honest, I don't think that is necessarily true, because there are a lot of middle class families in BC and Ontario specifically that bought properties while they were quite low, and that actually is a large portion of their portfolio once it did go up. Now, they are required basically to keep that property pretty much forever unless they want to pay this massive tax. Now keep in mind, they would have had to pay that tax anyways, it would just have been a little bit less. However, that is still a lot of money for most Canadians who consider to be equity rich and house poor, which is very common in BC and Ontario. Due to this increase, there is a lot of speculation that people will be offloading their properties before June 25th to try and avoid that extra tax. And to be quite honest, I'm already seeing it. There's a lot more listings hitting the market, and the ones that are hitting the market are typically investment properties right now. So there honestly really isn't too much to this video. I just wanted to cover that the increase in capital gains is in fact happening, and it's happening June 25th, 2024. And if you have an investment property that you are planning to sell in the future anyways, you might want to look at doing that sooner rather than later to avoid quite a bit of tax. Now, the landscape of real estate investing here in Canada is forever evolving, and it's important to stay up to date on all these different changes. So if this video is valuable to you, please hit that like button, subscribe to the video, and ring the bell to be notified when my other videos just like this come out, and I'll see you on the next one.